We tried and we tried and we tried and we tried. Hey everyone, good morning Stackers. It is me, Joe Main, live here with ASX Trader. Good to see you, my friend. How you going?
Yeah, good mate, good.
Good. So we're just probably going to be here just for a couple of minutes because we're having some good old technical issues. So what's happening is, well, it would be great. We could have a great little talk, an interview, or whatever, but, we want to share screens and stuff and take a look at graphs and charts and all that kind of thing. But looking like it's not happening today. What's happening with ASX Trader? Now, just a quick who the hell is ASX Trader? You know him, you love him. I'm very stoked to have him here. We will get him on the show on another proper time in order to share screens and talk about the markets, gold, silver, Bitcoin, crypto and everything else. But ASX Trader was a former primary school teacher and then I think a primary school principal as well, and has been a trader for a long, long time. Very, very good at what he does. He also has his Mastering the Markets course, which is currently, all the students are in there now for 2025. But if you want to find out more, you can go to masteringthemarkets.com. Amazing technical analysis, and was really excited. I'm still excited to have you on the show right now. So, g'day. How you going?
Yeah, good, mate. Thanks for having us. I don't know what the weather's like there in Melbourne right now, but mine's very drizzly, rainy, and terrible.
Sure. So what was happening is, let's have a quick chat, and we definitely will get you back on the show again to do proper. Hey, let's look at this. Let's look at that. What we might do is I might share my screen, and we might and it's kind of clunky, hey Joe, move the cursor to here, move the cursor to there, but we might just take a quick look at a couple of things. But what's happening, just so you know, the technical issue is Jason goes to share his screen, and then what happens is his voice goes completely robotic. It goes like that. So not the normal intro, people, but what we'll quickly do, you don't have you got a beverage near you by any chance?
I can get one. Give me a sec.
Okay. So you are watching Good Morning Stackers with me, Joe Main. What I do is, of course, I do live gold, silver, platinum analysis. We talk live gold and silver, etc. And we do this live show every single weekday. Hit the big red subscribe button to join the GMS family. Brought to you by Perth Bullion Exchange, perthbullion.com.au, wealthstack.com. Have ASX Trader on with us. Really, really excited. And he has his thing. What we do, Jason, just so you know, before we have a quick chat, we do here what I call the synchronized slurp. So that's where everyone out there grabs their tasty beverage and I grab my tasty beverage. We just slurp them together at the same time. Are you ready? All right, 3, 2, 1, go. Oh my God, that's the world's biggest slurp I've ever had in my entire life. Okay, so let's have a quick bit of a chat. So thanks for joining us. Sorry for the technical issues, everyone, but we can take some questions and a whole bunch of things. Of course, I can see your comments up here. And we'll take a look at the charts. Now, I would really highly recommend everyone go to, and I'll share the screen just for a second, just so you know. Highly recommend, that's the speed test. Highly recommend everyone go to ASX Traders YouTube channel. 22,000 subscribers here. Videos multiple times, every single month. The most recent ones being here, which is one I watched all the way through, is the market about to top? Talking about the S&P 500. Of course, he does his regular ASX stocks that he's trading and watching right now. Of course, talking about the crypto market and all that. Of course, I'd highly recommend you also go over to his Facebook channel, ASX Trader, right over here as well. 28,000 followers over here as well, and of course go over to masteringthemarkets.com. Okay, so if you want to be part of one of their courses, 2025 year is already fully enrolled and it's going really, really well. So let's go back, have a quick bit of a chat. So let's go back over to here. So I have a quick little bone to pick with you, by the way, which is your logo just changed overnight. If you take a look at this, I'll show you.
My profile picture.
Your profile picture. So you've just changed it from this one, which is your normal one, and I'll show it right here. This one's been one for the long time, that cool looking kind of cartoon bear. You've just changed it to This old chestnut right here, an AI-driven bull this time with TO Pro, etc. Just quickly, before we get into all markets and that kind of stuff, without being able to share screens, but what was the impetus for changing it from bear to bull?
Well, the reason I changed it to the bear in the first place was back, I think it was January 2022, and that's when I saw the market turning, and I went, you know what, guys, let's make a bit of an impact and change it.
Right.
And then that's kind of where it's been. But the problem is then that's when I grew my largest following. So then it was kind of like it almost became my brand then. Right. So then it was hard to kind of go back.
Yeah.
But I had a bet with Craig, who's the lead educator at Master of the Markets. And he said that if Bitcoin breaks above the all-time high at 80K, then I will have to, at 73K, whatever it was, I'll have to change my profile to a bull. So it's been an ongoing joke for a while. And
okay. Finally got it done. All right. We're going to get straight into it as much as we can. I guess we're just going to try and we'll talk about the general markets. I might share my screen again. If you're just watching live, you're with ASX Trader, one of the greatest technical analysis people I've ever come across. Very excited to have him on. Unfortunately, we're having screen sharing issues. Okay. And I'm also having lighting issues there. Screen sharing issues. So we can't share his screen because he goes all robotic in his voice. But I'm going to share my screen and we'll do some kind of something. You can sort of kind of tell me what you're seeing, etc. One of the first questions I had, and we're going to talk about silver, we might just talk about crypto in general as well, but obviously I've been a stacker of precious metals since 2010, mainly all silver. I've been a stacker of crypto since 2013, Bitcoin, altcoins, etc. One of the big things I've learned from you specifically just recently, I think this is just a little tip for my subscribers out there, is just the basic fundamentals of something as simple as how do we know when something has had a change of market structure, for example. So if you can give us maybe some brief examples. Again, it's going to be hard without sharing your screen, but maybe I'll share something. Is there a chart that you could point me to that I can quickly go to say, here's a real simple one?
I'll give you a really, really quick demonstration now. So type in Whitehaven Coal, WHC.
WHC, all right. So I'm sharing my screen here. That's a crypto. WHC, Whitehaven Coal on the ASX. Okay, sure. No problem. Here is Whitehaven Coal right there. Ooh, and this is on the quarterly time frame. I can put it onto the monthly. What would you prefer?
Can you change? I can't see. I can only see you.
Dang. All right. Give me. All right. I will change that so you can see that. So you can't even see that. Well, that's fun, isn't it? Let's just see. You can't see. This is the worst live stream ever. Let's see. So you can't even see me sharing my screen.
No.
Well, that sucks, doesn't it? Let's see if I add. If I go there. Okay. Yeah. Okay. This is the worst. We might not even be able to do that. I might have to abort this thing. Let's see. Add to the left. No. Add to the right. No. Give me 1 second. Solo. No. Then I'm just back in here and now I'm sharing my screen. I don't know what the hell's going on. We're going to go back and I'm going to do... No. That just sucks. All right. Give me 1 second. Worst show ever. Let's see.
It's okay. It's not a deal breaker. We can do that next time.
Yeah, sure.
Yeah.
There we go.
Just talk about.
Let's just talk about some stuff. Yeah.
I know a few of the things people wanted to talk about was precious metals and things like that. And
sure.
Only at the end of last year, we did a live event down at ABC Bullion.
Yes.
And we are going to be doing another one out at Perth Mint in March.
Oh, lovely.
But one of the most exciting things that I learned from the ABC Bullion is the general manager from there. He did an hour presentation around everything. And historically, precious metals are extremely undervalued. Okay. And one of the main things you need to understand with markets is that money never leaves the market. It just rotates from undervalued to overvalued stocks.
Correct.
You've always got to think it's always about risk to reward.
Yep.
And then when things get really expensive, again, the risk is not worth the reward. So then they start to reduce exposure. Because one of the things, but the hardest thing to remember as a retailer is you've got to put yourself in their shoes. And as a retailer, you're not wealthy yet. So you have more risk appetite and you're willing to take a bit more of a gamble because you've got nothing to lose. When you're a fund manager or when you already have wealth, it's all about not wanting to lose that wealth. because it's all about, I want to maintain it. So what you do is you strategically balance your portfolio in that way that you don't necessarily have to be, offensive, but it's more around defenses. And just like in sport, there's times when you want to be offensive and aggressive, and there's times when you've got to be, okay, we've got quite the lead here, now let's play defense. And same thing happened in the markets as well. So I guess that's what I was trying to say in that YouTube video last week, is there are a lot of warning signs right now, a lot of signals where, people will hear these warnings for a while and they don't realize that it actually takes a long time, because again, big money takes time to get out of their positions. That's really the one thing that we have as retailers over them, is that we're like ninjas. We can get in and out and you never knew we were there.
Yeah,
institutional money can't do that. You know what I mean?
It takes way more time. Yes, correct.
Yeah. So,
and we're talking specific. We're talking specifically here, not about silver. We're talking about the S&P 500 general stock market, right?
Exactly, everything. So if you look at the Shiller P ratio right now, it's up at 38.13 right now, and there's only one other time it's been this high, and that is the tech bubble, which is up at 40. It was at 42. 43. Yeah. Even the Great Depression was 32. So we're higher than the Great Depression. So it's the second time in history stocks have been this expensive. Yep. If you look at the Warren Buffett indicator, it's only been this high during the tech bubble and the 70s market zone as well, which is where, again, equities massively underperformed for over 10 years. Yep. And this is the thing that I was trying to tell people, is if you're not, me, myself, as a trader that knows what I'm doing, I'm not risking it. So you, as a retailer that doesn't know how to time the market, if you're buying in your long-term position now, history tells you that it's not a great time. And one of the things I love to do is combine technicals with macroeconomics and fundamentals. And that's really what Warren Buffett does, just on a bottom-up approach instead of a top-down approach. So for instance, Apple, he bought in 2016 because the PE ratio was down at 11. So it was historically undervalued, great company, got good growth. He's now exiting a large position of that because the PE ratio is up at 35, high 30s. Yep. So he's, for now, I bought it when it was undervalued. I'm now starting. He's not getting that completely, but he's got massive exposure. I think it was 25 or 30% of his portfolio. So he's like, man, if this corrects 50%, which again would be a healthy correction because markets zig and zag. That's right. That's going to be 15% of my portfolio gone like that. So it's all about just reducing that risk. And that's the kind of things that you have to look at on a top-down approach, which is the overall market. Yep. So that's the key things to look at there. Sure. So I'll so another people I follow you, and other people I follow actually subscribe to their private stuff and I don't know if you've heard of them, but they're called North Star Bad Charts. They've been around. Been around for a while. I've seen you share a couple of their charts. Right. Good stuff. Yeah, it's great stuff. Yeah, so they share it publicly on their Twitter, etc. And I just subscribe to their thing. Yeah, that's what I've seen. But I just, just like you, I'm looking for confluences. A lot of them. If that's whether that be in TA or just in fundamentals or just. One person thinks that, another person thinks roughly the same thing. So they talk about the capital rotation event. And the big one, which is currently when they do a lot of charting on it, which is the gold or silver, but they do mainly gold to the S&P 500 ratio, which is it's highly undervalued where it is right now. So they both have the same. You guys have the same opinion where its stock market's getting up there, but particularly in relation to gold and silver. Highly undervalued, and we're at a rate now, and again, I wish we could share screens right now. We're just having some technical issues. No, I actually had those charts to show you. But there is, and there is this the ratio at the moment. It's just under 0.5 on the gold to the stock market index. Okay, and traditionally, and I believe where the market structure is changing, and you can correct me if I'm wrong, there is around about that 0.5 level. So when it gets over to that point, it is a big signal for the big whale investors, the financial institution, to go, okay, now gold it's been undervalued for a while. It's back over that 0.5 level.
oh, okay, now's the time to start rotating, and that's probably going to see a confluence with the stock market having a decent dip, or just the beginning of a dip under that major level. I think it was about 5750 or 5700 that you were talking about in a previous video, and then that signals the massive gold bull run, and then obviously I think silver will follow. Do you believe in that major capital rotation event into precious metals?
Yeah, so I was going to share that same thing. Like the ratio, the gold to Dow Jones ratio, or gold to SP 500 ratio, very similar. It's down at historic lows, only seen at the Great Depression, the energy crisis in the 70s, and then the tech bubble.
Yep, three times in history.
Three major times in history when equities massively underperformed.
Yep.
And funnily enough, that's also when the Shiller ratio was above 30. Same, you know what I mean? So it's like, okay, expensive. When something's expensive, something's cheap.
Correct.
The thing that scares me the most, though, because if you look back at the energy crisis, it was undervalued in 1966. It didn't actually change market structure until 1972. Oof. So that's 6 years. And this is why macro analysis people get called, you did it, because, you know, they don't time the market. They just know when things are really cheap and really expensive.
I see.
And they're often very early, because what they don't realize, and this is what Tung, who's a macro, he's gone from a Vietnamese refugee to worth over $10 million. He's got over $1 million in silver right now. He just does that. He goes, I don't get the exact top, I don't get the exact bottom, but I get near the top, near the
close
bottom,
enough.
and I just sit and wait. And and I know within a few years it's going to rotate, and then that's it. Yep. He was really early on silver.
Yes.
He went massive in 2015 on silver.
Yep.
So that's 10 years ago.
That's really good.
And yes, he's up, I think, twice his money, which is okay.
Is that all?
Yeah. But, if you could have chosen Bitcoin or that in 2015, you probably would have chosen.
Of course,
the thing is, that's because he bought it during the accumulation phase, which is where big money, and they need time to accumulate.
Correct.
When things move the fastest is when it's in the public participation and excess phase. So that's the difference. But the thing that really scares me now is, like I said, back in the energy crisis, it took 6 years to change market structure. We actually bottomed in 2018 on this ratio, and we've just changed market structure literally just recently.
And which ratio is that?
So if you do the gold to Dow Jones ratio and go to the monthly, you can see that we changed market structure from the 0.5. We broke through resistance, and I wish I could share the screen.
Yeah, we're just having screen share. If you're watching live, we're having screen sharing issues, so we're talking about it. Ooh.
But the scary thing is, 2011 is when precious metals topped. It has been in a downtrend until 2018. Yep. Then it had its first move up, but we've changed market structure, for the first time on that monthly. Like you talked about on the 3 monthly, which is the bigger macro change. If we can get above that 0.075, which we're not too far away, then you've got a major change of market structure on the quarterly, which means that you've got, that means precious metals will outperform equities for years. Yeah, not days, not weeks, not months.
Yeah, no years. I mean, we're talking, between the 5-10 year kind of mark. Do you see it going out further than that, or do you do you have a more specific time frame, or are you just really just watching the indicators?
So I've got looking at the charts, there's no way it's going to get there before 3 to 5 years. So, I've got a minimum of 3 to 5, but I'm not really a timing person. I'm more around when all the charts are saying the same thing. So when the ratios are expensive, when they all start showing the blinkers and divergence and that kind of thing. So they're kind of the opposite to what I'm seeing at the bottom, when all of them are kind of getting down around the undervalued and that. It goes the other way. Another one that I love to look at is the gold miners to gold ratio. So again, when precious metals are in a bull market, the miners will far outperform the actual asset because they're leveraged to the asset. Correct. So, and that's why 6 months ago I said Australian gold producers are going to explode, because 2 years ago Evolution Mining, I think it costs about $2,000 an ounce to get it out of the ground.
Yep.
2 years ago, it was $2,500 an ounce. So they're making $500. Okay, it's some profit. However, now it's $4,500. Their cost of production to get it out of the ground has not changed.
Correct.
So that's now $2,000 more profit in their pocket that they've got.
Yep.
So then it's leverage. So all of a sudden they were making $500 profit. They're now making $2,500 profit. That's 5x profits. Whereas gold's only gone up about 40% since then. Mm-hmm. So this is why you get that leverage and that really. However, it does go the other way when the market
when they go down there,
they'll get hit the hardest as well.
Correct. Yeah, that's right.
But the good thing is gold is historically cheap, and gold miners are historically cheap to gold.
Correct.
That's what's exciting.
Excellent.
So it's like, okay, well, we know precious metals are cheap against equities, but not only that, but the miners are. So then there's massive upside in these producers, which is why they're saying that. The gold miner to gold ratio, we're down here now. Again, we've just changed market structure literally this month.
Yeah.
So we double bottomed.
Yep.
Retested the neckline, come up. I wish I could show you the chart, but
I know.
We'll show it next time.
You'll show it next time.
But the last time it was down this level, COVID bottom and 2015 bottom and GFC.
Right.
All historical turning points on precious metals as well. So, exciting stuff.
Excellent. So, I'm going to get we'll get all the questions, and we're going to get to comments, etc. But I'll ask some of them. How high can gold go? How high can silver go? And all that kind of stuff, which we all kind of want to know. I'll start with silver actually. So, and this is something I posted, and I did a video, and it was just a if this then that. And of course, I'm not holding anyone to anything, and I didn't hold anyone to it when I said it. But if you take a look, obviously, and we can't show the charts, but if you take a look at the silver chart at the moment in USD, that is, or you could probably do it on AUD, but on USD, obviously, I've been sharing many, many times that if you go to the monthly or the 3 monthly chart, it's in that massive 45-year cup and handle pattern, which currently seems to be playing out. And so I entitled a video not too long ago, 730, a little bit clickbaity, right? $730 silver, is that possible? All that kind of stuff. So it was just basically looking at it going, hey, if the pattern plays out, not that it potentially will, but if that cup and handle pattern plays out, and you obviously, the way, as I understand a cup and handle pattern to play out, you take the cup and the depth of the cup, and then you match that to the breakout. It takes it on a logarithmic scale to around about your $700 kind of dollar mark. Now, quick, just sort of personal thing for me. Am I way off the mark on that, or in some kind of market, is that even potentially doable? Like, what's a professional person's opinion on that?
It's very possible. The thing that people won't understand though is that it will probably take 10 to 20 years to play out that pattern.
Right.
That's the thing.
Right.
So they're going to go 700, load up today, and if it's in 1 year or 2 years, they're like, what's going on?
Yes.
So you've got to realize that cup and handle pattern happened over 45 years.
Exactly.
So, and then the actual impulse, like when that whole impulse, so it started in 30 something, and then it went up to 1980. So that was a 50-year impulse.
Yeah.
That it went from 50 cents to $50. So I think it was 25 cents to $50. So it did a 200x. But it took 50 years. So again, we've only just started the journey. So again, it's not going to, yes, it's very achievable, but it's not going to happen in a couple of years. No. It's going to be 10 to 20 years that it would get there. So as long as they have expectations and looking at that time frame, like you said, you're looking at the 3 monthly candle. So that means 4 of those candles is 1 year.
Just a whole year, exactly.
So, you know what I mean? So you're looking at a long period of time. I think that's where a lot of people go wrong. I was screaming gold was bullish from the rooftops back in 2020. Middle 2021 to 2022. Yep. And they're like, when I was screaming it, they expected, why isn't it doubling in a few months?
Because time frame.
Like, guys, that's right. I'm like, it takes time to play these things out. Yeah. Now, they can tell, oh my God, it's nearly doubled, but it's taken 2 years to do that.
Yeah.
So the thing is, silver is the only asset that's under its 1980 price. Like, isn't that crazy? 1980. I was born in 1983.
Yeah.
So if someone had bought me silver when I was born, it would still be worth the same. Like, that's crazy.
And it's
as you said at the beginning,
Yeah, go ahead. No, I was going to say, and it's a current, if inflation adjusted price of silver. There's a couple of varied ones. One says, that should be about $140 roughly now at the price. Other people like Shadow Stats, for example, says close to 1,000. I kind of find the middle there, but I look at least 140 in inflation adjusted prices.
Yeah, well, that's right. So that's it. That's not inflation. So when you say $700, really just going back to $130 is just going back to 1980, 45 years ago.
Correct.
So then you're
that's
like,
right.
Well, hang on. This thing should have actually appreciated since then. A 4x?
Yep.
Easy.
No problem.
So, I don't think it's not crazy at all because actually it's actually crazy that it's this price is actually what it is.
I love to hear that you're such a silver bug. That's good. And look, I've been saying for a long time, again, I rode that wave with silver. I did exactly all the wrong things. So the quick little history of me, I had $5,000 to spend when in my early 30s, and I was like, what am I going to put it in? Started typing in YouTube, best things to invest in, and then all the recommended YouTube things come and go, silver, gold, the next thing. Now this was in roughly July of 2010, and so the price was around about 17. Well-ish, 17, 18 US dollars. And then it took me 3 months to decide. So the price was around about 24, 25 US dollars at the time. And then I rode that wave all the way to the peak in 2011. But I was in that retail participation stage. But I've been saying for a long time, triple digit silver is no problem. And I'm probably thinking, look, the next 2-3 years, something like for at least just triple digit to back to 100 US dollars. I mean, does that sound unreasonable to you?
Yeah. So what I've been saying is I'm happy to accumulate. So I've got all my silver miners. I'm massive, but after going to the ABC Bullion event as well, I wanted to actually get some physical silver, and I didn't have any. So since that event, I've been just accumulating. And one of the little tips that was shared with me was, if you buy any precious metals under $5,000, they don't have to report it, which means that you don't have to report it. So if it's under $5,000, however, and that goes the same for when you go to sell it as well. However, you've got to make sure that, remember, when you're going to sell it, it's going to be worth more than when you buy it. So if you go and buy a 1 kilo bar right now, it's about $1,700 Australian. So if it does more than a 3x, it's going to be more than $5,000.
Yeah.
So the little tip that was told to me was go and buy 10-ounce bars. They're about $500 now. Okay. So then if silver does do a good 5-10x, when you go to sell it, it's going to be less than $5,000 because 500 times 10 is 5 grand. So little things like that.
Okay, interesting. If I can interject on that, that's interesting. So I haven't heard that. My understanding, because I've worked for three major bullion dealers in Australia. I worked for Goldstackers originally. I worked for Bullion Now, was their first employee. Recently worked for Ainslie Bullion as well in the social media side of things. My understanding of the ID requirements. It's funny. I just actually had a bunch of people asking this on the Savvy Investor Forum on Facebook. My understanding of the ID reporting requirements and all that kind of stuff is, yes, if you spend under $5,000 in any bullion dealer, you are not required to provide identification. You can just go in anonymous. Out of interest, just so you know, that's a per and listen to me very carefully. Per person per day. So per day. For example, as a bit of a tongue-in-cheek here, I've served thousands of customers over my time in the precious metals retail. I've had literal whole families come in, the dad, the mum, the uncle, the auntie, the thing and all that, and they're welcome to purchase under 5,000 per person per day. You just can't one person I literally had this quickly, 1 second. I had one guy come in when I was working at Goldstackers and goes, "Can I buy 5,000?" No problem. Walked out. 10 minutes later, he literally, I'm not joking, it was almost like he had one of those nose and glasses things where he just changed something. I think he put on a hat or took off his hat or something, and we went, "What are you doing, man?" Like, you can't do that. So anyway, so yes, it's per person per day, but that's a little tidbit for everyone. But as far as I understand it from the selling side of things, every dealer I've worked for, you need ID no matter whether it's $1 worth of precious metals or $5,000, because they have to protect themselves. So I'm not sure about that. What ABC said.
Okay.
ABC, because if you go into sell,
it wasn't ABC. It was just
okay, it was someone else. Yeah.
Investor.
Oh, cool. Yeah. So you do need, just so you know, you do need ID no matter whether you're selling back a tiny 1 ounce gold, 1 ounce silver coin, or whatever, because they've got to checks and balances, and did they steal it or did that other kind of stuff. But in terms of tax and all that stuff, that's all just self-reported and all that kind of thing.
Of course, yeah.
Now let's you go ahead.
What's your, because I've spoken to a lot of bullion dealers, and a lot of them are saying that platinum is historically cheap.
That was my great question. Good segue there. Yes, I was about to ask you about platinum. I think it is very historically undervalued towards gold and silver at the moment. Again, if we could share the charts, we absolutely would. We're just having some tech issues there. But yeah, highly undervalued. Now, having said that, it can go way more undervalued because, for example, there's, and again, I can't share the screen, but if you taking a look at the platinum to gold ratio at the moment, historically low, but it's also underneath a very major trend line at the moment as well. It's not back over, and as far as I am aware, it hasn't changed back into a bullish market structure yet. But I think eventually it will. It is highly undervalued. Platinum is still within its main normal range. It hasn't changed its market structure in terms of becoming fully bullish again. For me, that's if we're talking US dollar price, wish I could share the chart, that's at around about 1,115 US dollars, where I think, and I could be wrong, you're the pro, where it maybe changes the market structure there. But over the longer term, it's historically very low. And I've got, just so you know, I've got people, I'm going to share maybe some comments while you get that up. I've got some people here, we've got a lot of comments here. A lot of, one person in particular, if he's on today, is so bullish platinum. It's hard to,
I've spoken to,
what do you think?
about 10 ones, and they've all kind of said, because I was talking about silver and that, and they've all said, platinum is I think it was probably 7 or 8 out of the 10.
Yeah, right.
Platinum.
Yeah, right.
But yeah, the charts haven't, the ratios are showing they're undervalued, but they're not changing structure yet. And
correct.
As we know, money goes into the best of the best first, gold.
Correct.
Then it will flow into its queen, silver.
Then
it will go platinum, palladium, blah, 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 so forth. So it will come, and I don't think anyone will be disappointed buying platinum today kind of thing, as long as you have long-term outlook.
Yeah, I do agree.
But it hasn't actually changed market structure right now. So you're just waiting for it. Yep.
Now, of course, if anyone wants to stay updated, of course, they can subscribe to my channel, of course, and follow me on X, but they can subscribe to your channel as well, ASX Trader, and follow you on X as well. Any more? Let me just see if I've got any precious metals questions. Just bear with me a few moments, and everyone's really excited to have you here. And we will talk about Bitcoin and crypto as well. And I really want to ask you very specifically about others at the moment, the altcoin market too. Let's see, because there was a recent call, and maybe we'll talk about that. Let's switch very quickly. So we are very bullish on the precious metals. Capital rotation very likely coming out of the stock market into precious metals for a good 3 to 5 years, possibly even longer. Now let's talk about the smaller cycle, which is the Bitcoin and the crypto cycle. What I've been doing, and I've been telling my subscribers just recently, I have been moving a portion of, certainly not all, of my silver holdings, my physical silver, into the crypto market to ride that potential wave. And I did that a little while ago, and I've done okay. I've been able to, and it's all with the goal of upping my precious metal stack. So I've been able to do that. If I sold out, I'm currently parked all in, because we're in sort of no man's land with crypto at the moment. I'm parked all in USD right now. And I'm just waiting for the signals. I'm waiting for, okay, we're going to continue the run in crypto and I can increase my precious metal stack, or do I just need to go and buy all precious metals again and just, I would have upped my stack a little bit, but not as much as I would have wanted. So maybe if we can quickly talk about Bitcoin and the altcoin market and see where you think we are.
Yeah, so this was a funny thing when was it, around November last year. I saw someone went all in on silver. Yeah. And then silver hit the top of its daily and started to retrace a little bit.
Yeah, right.
And then altcoins started exploring. And then
Yeah.
they're like, should I sell all my silver and buy altcoins? And then I'm like, well, and they said they were buying it for long term. I'm like, well, is your long term a couple of weeks or is it? And again, this is why ASIC and that are very, very kind of tough on personal advice and stuff like that, because my long term is completely different to obviously someone else's long term. Because when I say long term, I'm thinking I got a little boy at home, 3-5 years old. I'm thinking, what would I buy for them now? So when they're 20 years old, they're going to make the money while they're great. That's my long term. You know, over 10 years, easy. Anything under 10 years is not long term to me. However, someone else long term might be, you know, a year. So, you know, to me, that's medium. So yeah, really, really big. But the funny thing is with the altcoins, the Trump trade. So what happened was Trump came in, and the minute that he came in, it absolutely went ballistic and just pump.
Yeah. And then he launched his own meme coin.
Well, launched his own meme coin.
Uh-oh.
You know, it was kind of textbook of at least a major local top coming, because everyone was on one side of the bus, and that's something to always look out for. Even if you didn't know how to read a chart, you could, if you followed sentiment, you can make a lot of money.
I did that. I literally did that. I just went Trump coin, bang, buy, and then I I actually made a good little bit of thing, and it was just like I wasn't looking at the charts. I'm like, okay, high point, okay, I'm out. And then since then, it seems like that. Yeah, you're right. That it seems like the local top, like that was almost like a pre-sell the news event. It was kind of like a sell the news event, but it was like a real like Trump and the Melania coin. Okay, I think we might getting a little bit up here.
And you know, your story that you talked about before was a perfect example of that. You said when you came in 2010, you said, what did you do? You went on YouTube, typed in, what should I buy? And what popped up? Silver, because it was in the excess phase. So the sentiment was at extreme euphoric, and that is unfortunately how retailers get trapped, because they go and they research, and it's whatever everyone's talking about is when big money is often getting out, and when it's the opposite, when no one's talking about, or it's the end of the world, is really when you should be getting in. Lithium recently was a good example of that. You know, 3 years ago, oh my God, it's changing the world. They all thought within 5 years cars are going to be gone and everything's going to be electric. Hit the top, and now what's the sentiment on something like lithium? It's the opposite. Oh, it's dead. Oh, there's going to be new technology. So actually, all those people that were really bullish on lithium 3 years ago, now is the time when you should be looking at it. Again, I'm not saying it's bottomed right now, but sentiment is matching that. So, you know, if you just went off the sentiment trade, you'd actually be a lot better off.
And you shared, sorry to interrupt, just very quickly, just if any, because a lot of subscribers will be like, lithium, what stock should I look at now? I remembered the one that you were looking at, and I've already set my alerts for your change of market structures as well. I've got those set. One was CXO. I think that was a big one. So that's a quick little non-financial tip for anyone. If you're looking at lithium, CXO on the ASX might be something to look at.
Well, it's the SIG. So anyone that's been following me knows the story on that. That was one that the herd really, really loved. And they're just saying it's going to the moon at $1.60 above. Yeah. And then I said it's topped out at $1.60, $1.70 there. And it was as if I'd slept with their wife. You know, abused. You're an idiot. What do you know? Da, 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 da. And again, that was that euphoric sentiment extreme.
Yeah, right.
You know, and what did it go down to? 7 cents. Yeah. The thing they didn't realize is that it was 2 cents only 2 years prior. It had already done 100x or close to. So, you know, the gains were already there.
Correct.
So now, you know, that it's all the way down. It's on a key Fibonacci level, Fib 618. If you look at the log, it had its 5 ways up. It's had its ABC down. So yeah, it's at a zone that interests me. And what I do is, I put this is my zone of interest. And then when it gets there, if I start to see the life and the change of structure, then I'll buy. So yeah, it's something that's definitely on the watch list. But going in regards to altcoins and that now, I'm actually, so it's in a downtrend right now, which means that there's never anything in my portfolio that's in a downtrend. That's my rule. And like investing's kind of different because it's a different time frame.
Correct.
But trading account, anything from the daily, and right now it's in a downtrend.
Yep.
It seems really easy to be like, oh, that makes sense. But I guarantee
It's
everyone
not.
on this call right now,
It's
if you pull
not.
up your portfolio
Yep.
and pulled up the chart,
Totally.
I reckon that not only, probably over half would be in a downtrend.
Yep.
Because the funny thing, and it's
We don't like losing. And we don't want we're trying to, it's pain avoidance of, if I sell now, I've literally made that loss. So I don't want to sell right now, even though it could probably go way down more.
Yeah, it's easy for us to hold on to the losers, but easy for us to cut the winners. But we should be doing the opposite.
Yep.
And Frank Watkins been training for 50 years. He's we have a call with him every Monday. And 2 very important tips that he told us. And I was like, oh, that makes so much sense. Every month, open up your portfolio and cut the worst performer.
Oh, I like that.
I'm like, oh my God, makes so much sense.
It really does. Okay,
because
sure.
if it hasn't done anything in a month and it's been so that way you're getting rid of your worst performer every month. What we do though is we probably cut the best performer. Oh, that one's run.
Oh, that I made a good profit there. I better, because it might, now it's gone up to a certain level.
Okay.
So what I'm going to do, this is, we all do this. Oh, it's up 20%, whatever it is. I think it's at a peak now. I'm going to sell it and then try and buy back lower. And then, it almost always runs away from you. And then you've just lost your best performer. So that's a great tip, actually. Yeah, okay.
Yeah. So I was, is from a guy that's, been doing it. He's been trading since the 70s. So he's lived through the 87 crash. He's lived through the GFC, the tech bubble, the COVID drop, that like everything that we've read about, he's lived and breathed it.
Okay.
And still standing. So a couple of little hot tips there.
Now, there's one thing, because people follow you very closely. So for example, when a video comes out of yours, I'm like, oh, no, I can't put the kids to bed now because ASX Trader just, uploaded video. Or when you put a post on Facebook, I'm like watching it straight away. There's one here. I just want to get your quick thing. It was the altcoin market. One of your more recent posts. So are you still of the opinion at the moment? Because everyone's going to be asking me this. With the others, and I can't share the screen, but you're talking about the potential little mini move back up to like a relief rally to like the 295 $300 billion mark in the others, which is the altcoin market minus the top 10. We had a move up to about 280 billion, which out of interest I shared yesterday on my channel, or the day before yesterday. It came up to it was a key Fibonacci level, which was around about 280 billion. It was from the old highs of the old peak in 2021 and the old lows. And I saw this little 280 mark and I went, you might have a little bit of a resistance there. We found a little bit of resistance there. Are you still on that 300 billion range? Are we on that little relief rally?
Yeah, no, we've still got further upside in my opinion. I think we're going at least that 295, 300, but we could even go up to kind of 320.
Yeah.
So really, that's my zone. That between 3 and 320.
Yep. I really wish. So go ahead.
Oh, it just depends. When we zig and we zag, we have shallower retracements and we have deeper retracements. So if it's a shallow one, it's that 295, 3. If it's a deeper one, it's that 320. Yeah,
320, okay. And once again, apologies if you're watching live. We wish we could share the screen. We're just having screen sharing issues. But for my subscribers, I've been talking about the altcoin market for a while. I've got a level. It's actually at 330 billion. And it's around about the top end of the downtrend line. It also lines up with a major Fibonacci level, which it might be the 382 or the 5. And it's around about there. And for me, I'm not getting back into the market in a major way until I at least see it close and hold above around about 330 billion. For you, when we talk about that change of market structure, where is that change back into a bullish market structure for the altcoin market in terms of that market cap?
Yeah, you're exactly right. It's now that I look, it's not 320, it's about 325, maybe 330, depending where you go. Right. So
I'm sorry, I'm giddy like a schoolgirl because you said, "Hey, I'm a professional guy," and you amateur just said something that I agree with, so that just makes me happy.
No, so that 320-ish, 320, 325 zone, you've got the Fib 618 retracement, you've got a major support resistance level, and you've got the channel resistance. So that's what we call that point of confluency. It's where multiple rivers meet to tell you. And what you've always got to do is you've always got to, when you're a bull, you've always got to know, okay, where will the bears attack me? Okay, because where are there multiple? That's the way I always think. And when you're a bear, you've got to think, okay, where are the bulls going to all stand up and attack me? And that's always the thought. And right now I'm bullish.
Yep.
And the zones that I'm looking at where they could attack me is that kind of 295, 300, or that kind of 320, 325 kind of zone. They're my big points.
Yep.
Also, you know, I talked about sentiment and things like that.
Yep.
Sentiment got too bearish. So now it's okay, we need to at least reset sentiment again. Okay. So we're due for a bounce. Everything's really oversold. As we know, markets zig and they zag. It's had a massive move down. Yep. There's no way you're not going to get some form of retracement right now.
Sure. And so for you, if it starts closing, and I don't want to put words in your mouth, but if it starts closing above the closing, probably on the weekly or the monthly, I'd imagine, rather than the daily, because I find the daily can really fake you out a lot, and it's more so the weekly and the monthlies. But is that 330 billion, or are you like, if for you personally, are you like, I'm back in with the trading in altcoins if it's 330, or you're talking like that 380, 390, 400 mark? What is it for you?
So I've got a trade on now, but I've entered on the hourly, which means obviously if I've entered on the hour, I'm not looking to hold it for a year.
Yeah. Right.
But I'll be looking to exit that when we get up around those zones that I just talked about. But in regards to the market structure doesn't change at a point. It changes when you have a higher high, higher low. So what I would expect is we should just get a bounce up to that 300 to 325. Then sellers will step in.
Yeah.
But when those sellers do step in, what we want them to do is then buy off the zag zone going the other way, which means they should start buying off the kind of 270 to 280 zone.
Yep.
And then what that's telling you is, hang on, last time they were buying down at 240, why are they now buying at 270?
Yep.
Okay. So market structure is just a visual representation of showing you sellers selling lower, buyers buying lower.
Yep.
So you got to think, like if you visualize, they're buying at $5, they're selling at $7.
Yep.
Oh, now they're buying at $4. Hang on, why are they buying at $4? They're buying at $5. That's weakness.
Yep.
And now they're selling at $6. Well, hang on, they were selling at $7. That means they don't believe it's getting back that high. They're getting out earlier. So it's like that visual weakness. So all you're looking for is the opposite. Then all of a sudden, hang on, why are they selling higher? Why are they buying higher? Because then that's showing strength. So it's not something you just go, definitely that 320 is a key level, but I would want to see a change of market structure through that key level.
Yep.
So it's on the daily, it's not going to happen. Let's just play. You're looking at it least kind of mid to end of March. So don't expect a massive change in February.
Yeah, sure.
You'll get a move, but an actual confirmation of a change of market structure.
Yeah, sure. And I'll go through some questions, and we do have some here. And just for those who are like, I hate altcoins, they suck, I'm a Bitcoin maxi. I've been looking at around about, again, I wish we could share the screens. I've been looking at around about at least, it's around about 104,000 is what I call the final hurdle. So I call it the final hurdle to almost guarantee, black swan events and all that. For new all-time highs coming in Bitcoin, but until it's above about 104,000, that's not real. There's no real confirmation for me. But any thoughts on the general Bitcoin?
On Bitcoin, yeah. So Bitcoin is not bullish or bearish right now. It's in a sideways trend.
Yeah.
So when and this is something that the funny thing is, people think you lose money in a bear market. You actually, traders in that lose money in a sideways market, because what they do is they go long. And then it goes short, and then they go short, and they go, and it's the whitewash.
Oh man, just recently. Look, again, everyone should take me as an amateur as a guide. Do not get lost in the chop. And I literally have to post that on social media as a reminder to myself. Don't get lost, because I'll go, oh crap, I just went long. Oh god, I'm gonna have to hit the reverse button. And then go reverse the leverage, and then no, I'm done. And then I lose a small amount, but it's I'm just getting lost in the chop here, and it's the worst. You are right. Sideways markets suck.
Yeah, it just gets you because And the reason they do it is because it runs so fast that then it's like everyone's really bullish. So then they get them out and then they go, oh, okay, we must be getting a major retracement. And then it gets, and it just messes with your mind. And you probably always hear me using the surfing analogies.
Yep.
And if you try and surf in whitewash, you're just going to keep falling over. So right now I'm not interested in Bitcoin until it gets above the 107,000.
107.
Then, 107. Well, it'd be good to get through that 104 because that's the zag zone.
Yep.
But until it gets back above that 107, we're in they're selling at 107 and they're buying at low 90s.
Yeah.
And that's it. It's going sideways. So until I get a change of market structure through that 107.
Yep.
I'm and this is where I'm like, okay, this is not good right now. Oh, let's go and check out what is good. Oh, the materials sector is breaking out. Oh, okay, let's go. You know what I mean? So there's always good surf somewhere. You've just got to, and if you're a surfer, you don't always go to the same surf spot because it's not always going to be good there.
Yep.
So, okay, if the surf's not good there, it's good over there. And you just got to go find it.
All right. Well, we've gone for a while now, even though we haven't been sharing screens. I might just quickly, and I'm sure you've got things to do and everyone else does too, I might just share a couple of quick questions or comments, if that's okay. So we've covered, we're bullish on gold, we're bullish on silver, we're bullish on the capital rotation from the stock market into the precious metals era for a good, decent number of years. Talked about Bitcoin, talked about altcoins. Bit of a rise in altcoins potentially. Bitcoin just on sideways. I did have one question. We may not be able to answer this question because it might be a share screen dependent. But David Smith here asked, Joe, could you please ask ASX Trader about how he uses the RSI indicator, the Relative Strength Index indicator? How much importance does ASX place on the overbought and oversold areas, and should these zones only be used with divergence? Bit of a technical question. Are you able to give an answer without being able to share your screen?
Yep. Yeah. So every indicator I use is what's called a leading indicator.
Yep.
And when you use it as overbought and oversold, you're using it as a lagging indicator. So lagging means that you're taking past information and then it's telling you that. Leading is giving you information and predicting what should happen. Okay. So you always want to have things as leading indicators. And you'll notice on my charts, I have two things. I have RSI and I have OBV.
Yes.
OBV is a leading indicator because it's volume. So volume precedes the move.
Yep.
And the way I use RSI is as a leading. And so I actually don't use it for overbought and oversold at all.
Okay.
What I use it for is divergence. And there's multiple ways you can do that. There's the regular, bearish and bullish divergence for reversals. You've got hidden divergence, which is continuation of the trend. And you've got directionally aligned divergence. Because at the end of the day, the RSI should always do the exact same thing as the price.
Yes.
So when it's not, it's divergence.
Correct.
And there's multiple forms of that divergence.
Right. Okay.
In my Master of the Markets course, we literally spend a whole month on RSI and divergence.
Awesome.
That's how complicated and how much there is to learn about it when you actually dive into it and use it properly. Yep. If you go on YouTube and say, what's RSI? You'll get a 5-minute video on overbought above here and to be honest, chuck it in the bin.
Exactly.
The biggest moves happen when RSI is above, when it's overbought. Yes. And the biggest move happen to the downside when it's oversold.
Yes.
So chuck it in the bin if you're using it for that.
Yep. And this is a great lesson for me because for years I would look at the RSI and just go, it's just got into extremely overbought zone, and then I see the price. I see the price go, wait. Like that, and similarly, it's just dipped into oversold. Maybe I'll buy some here, and then it goes boop, 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 boop. All that. So absolutely agree. We have a question here. I might just quickly answer this because this is about precious metals. Being a beginner, how do you get exposure to gold and silver, physicals to sell at a later time, and to who? Great question, Lana. If you're still watching. You buy physical metal from a precious metals dealer. The way it works is you buy the market price plus the retail price on top. Buying precious metals is like any other retail product. If you go to Coles or Woolies, you want to buy a litre of milk. It's all a litre of milk, but they're different brands, different prices, etc. So it's just based on wholesale costs. So you just go to a bullion dealer. You can buy online. PerthBullion.com.au is my favorite preferred dealer. Perth Bullion Exchange, that is. You get free shipping from them, for example. But how do you get exposure? You can buy the physical. You can also buy the ETFs as well, if you don't want to get into the physical metal, and to sell at a later time. And who do you sell to? Well, when you sell precious metals, you can do one of two things. You can sell back to the bullion dealer themselves. They'll happily buy it back. Or you can just sell into the private market. You could sell to ASX trader, for example, if he's looking to buy gold or silver, and you can literally do that via there's Facebook forums, there's buy, swap, and sell markets, and all that kind of stuff. So that's how you can do that. Thanks for that question, Lana. Final questions, and I know you have to get into here. Lance, just a comment. This is I have followed. So Lance says, and he has. I know he loves your work. Lance says, I've followed ASX for ages. Poor bloke used to cop it in 2021 when calling the top on lithium. But he nailed it. My respect comes from the fact he shares with us and encourages. Yeah, absolutely.
Thanks. I appreciate it.
Yeah. Let's see. Final comments. All right. Jason Ashworth asks, hey, ASX trader, I have noticed a move away from share price depending on the PE ratio and earnings and more on vibes based on news. If you agree, what do you think the reason for this may be?
As in that the price of the stocks are moving on news events instead of on.
I think that's what he's saying. Yeah. Notice he's noticed a move away from people looking at it like P ratio and earnings, and more just on basic sentiment and vibes. Have you found that to be the case? And if so, why might that be?
Yeah. And that's what happens in an excess phase. It's because valuations get too extreme, so they justify on other ways.
I see.
If you look at the BNPL sector back in 2021, Zip, Afterpay, all those kind of things, they were up at ludicrous levels, but then people started to justify, it's because it's a new this and it's a new that, and then all of a sudden what happens? Zip, $14 down to 20 cents, it does thing. And that's, if you look back at the tech bubble, Cisco, they started moving away. It was price to sales ratio, and it was above 50 or whatever it was. And that's now what's happening with NVIDIA. It's like they've moved to price to sales ratio, which is higher than what Cisco was during that period as well. And you're exactly right. But they start justifying over, what's going to happen. But as Dow theory states, the market discounts everything. So you've got to remember what you're talking about right now. There are people a lot smarter than us that were aware of that news way before we were as well.
Correct.
So what they do is they price it in and they start doing it. So I actually never ever trade news because, like I said, there's a lot bigger and smarter than me that already knew that.
Yeah.
You got to think like they actually send people out to these places and speak to the CEOs and this and that and get like actual info.
Yep.
We're just hearing it on Channel 7 News and think that we've got some kind of edge.
Yes, exactly. Yeah, as I've said for multiple times, when, for example, the top in the gold or silver market will coming towards the top when every man and his dog is talking about it, and in particular, and I'm using the mainstream media. When you see on the Today Tonight, A Current Affair, all those ones, and they go gold, the next best investment. Well, you should be here, silver, and then they go, here we are at the Perth Mint. The Perth Mint's Australia's largest, blah blah blah. So everyone's got like Perth Mint, blah blah blah. That's the time. That's the shoe shine boy mentality when it's now time to start getting out. So in terms of Jason's thing, he has noticed that change more about vibes than just technicals, and that's probably signaling a top in the kind of the stock market of like it's just vibes now.
In saying that though, you've got stocks will go much higher than you think, and they will also go much lower than you think.
Yeah. Okay.
Okay. So you've always got to realize that they can go on like for instance that Zip and that.
Yeah.
It was and this is the other thing people go, they go, Zip was $14. Now it's, 20 cents. So it's so cheap, but actually it should never have been $14. So you've always got to be really careful of price action. Yeah. Because, and same with CXO, when it was $1.80, it should never have got to $1.80. Right. So that's the thing you've always got to be careful of. Don't look at price and go, this is cheap because that's where it was. Yep. If you go off history, more times than not, a stock will never get back to that price again.
I see.
Unless there are some kind of, So just be really, really careful.
Fair enough. Last question, because I've got to go, you've got to go, and everyone else does. Someone mentioned, and I don't know if this is probably factoring in, but do you have a political, as in like Trump's in, is that good for the market? Is that bad for the market in general? Or does it really matter in the first place? Are the markets just going to do what they're going to do in the first place? Any tie in there?
The thing I'm not sure about is, I think after the assassination attempt on Trump, it was almost like he's going to get in after that. So I don't know if the market started to kind of price in him in the market a bit, because if you look after that, the market went really ballistic. So it's a really tough one, because he obviously, he's big on the stock market. He's going to do whatever he can to keep it afloat, and he doesn't want to be the person, that caused the next GFC or anything like that. So I think he will do everything he can. I guess it's those variables, like what if he does get assassinated? What if, he's stirring up some big things with bringing out the Epstein files and this and that.
And Elon and Doge and
Elon, yeah.
So yes, you're right.
I think market doesn't like uncertainty, and him doing all that is bringing a lot of uncertainty in the world right now, and the market might not like that. You know what I mean? So,
well, that's true. But what we do know favors uncertainty is precious metals in general.
Yes.
As well.
Safety, yep.
Yes, correct. I think we'll leave it at that, mate. Thank you so much for joining us, and thanks. Lana says, love the knowledge shared here. Thank you so much. ASX is the real top G, absolutely the real top G. And my apologies and our apologies that we couldn't share the screen. Like, we're talking about charts and stuff and you can't share a screen. I promise you next time, and I'd love to have you on the channel once again. Hey, you never know, it might become a regular monthly thing. Who knows? We will get you back and we'll actually share screens this time. But I think we did all right without sharing a screen. But, appreciate your time. Thank you so much, mate. And I will let you go. And I'll say goodbye to my Good Morning Stackers family. Won't do the usual outro and all that. I'll just say stay safe, stay informed, keep stacking. Thanks, ASX Trader, and we will see you all next time. Have a good one.
Bye, everyone.